Foot Locker announced plans to close 400 stores by 2026. And its CEO said, "We are entering 2023 with a focus on resetting the business, simplifying our operations, and investing in our core banners and capabilities to position the company for growth in 2024 and beyond." So there are some major changes happening at this company. And looking at the recent financial results, they are needed. The revenue compared to the last year went down by over 2.3%, but that is just the tip of the iceberg. Net income went down by an incredible 61.7%. Earnings per share went down slightly less at 58.4%. Cash and cash equivalents also went down by 33.3%. And the only positive thing is that long-term debt went down, but only by 1.1%. So these results are really not good. But we have to look at the big picture, not just short-term results. So let's analyze and value this company, starting with individual insiders. That is an X with 1.1% of the company owned by individual insiders. And we would like to see this number over 2%. So unfortunately, the management does not really have its skin in the game. And are individual insiders buying? That is an X. In the last year, we see only sale transactions from individual insiders. And do super investors own this company? That is a check with two super investors, and they are Lee Ainsley and Bill Miller. For Ainsley, it is only 0.11% of the portfolio, and for Miller, it's just 0.05%. So these are not big investments. And are they buying right now? That is a check. Lee Ainsley bought over 100,000 shares in Q4 2022, adding over 900% to his previous investment. Return on invested capital. That is a check at 16.7% 10-year median returns. And we want to see this number higher than 10%, so that is a good start. And now let's take a look at free cash flow growth. That is an X at 2.9% 10-year compound annual growth rate. Unfortunately, the free cash flow is growing really slowly. And what do we know about net profit margin? It is also an X at 3.9%, and the sector median is 4.6%, so they are struggling compared to their competitors. And now let's take a look at share buyback. It is a check. They bought back 32.5% of their shares in the last 10 years. That is great news for long-term investors. If you bought 1% of the company 10 years ago, now you would own almost 1.5% without having to invest any extra money. And how is the debt looking? It is a check. It would take only 1 year to pay back the long-term debt with free cash flow. And we want to see this number under 2 years, so that is some good news. The dividend yield is 4.1%, so that is quite nice. You get $1.60 annually for every share you own. And what about the payout ratio? It is a check at 32.4%, and we want to see the payout ratio somewhere between 20 and 50%, so that is good. We get a fairly high dividend, but not too high to actually disturb the growth of the company. And what about dividend growth? It is a check at 5.2% 5-year growth rate. And they were paying dividends since 2003, but they were not always growing. We see a decline in 2020 and 2021. And now they are back with growing dividends. The current PE is just 11, so that is encouraging, and considering the recent drop in earnings, it is even more interesting. So let's value Foot Locker using a discounted cash flow formula. And for that, we will have to estimate the growth of this company for the next 10 years. So in the low scenario, we will estimate a growth of 2% for the first 5 years and then 4%. In the medium scenario, 4% and then 7%, and in the high scenario, 8%, and since year 6, 10%. So with such estimates, the intrinsic value in the low scenario is $60, in the medium $72, and in the high scenario $93. And when we add a 30% margin of safety, we get $42 in the low scenario, $50 in the medium, and $65 in the high one. And the current price is around $39. So it is all in the green. Even with a growth of 2 and 4%, this company looks cheap. So here we have a company that is going through some tough times. I mean, recent results are really bad. But now it is restructuring. It is closing a lot of shops to emerge stronger in a year or two. So there is an element of unknown. But there are also some things that I really like. Great share buyback program, not a lot of debt, nice dividend, and an interesting price. And if you want to see the analysis of Nike, then click here. Or click here if you want to see the analysis of VF Corporation that owns a lot of apparel and footwear brands. Thanks for watching and bye-bye.